September was a bit quiet in crypto, wasn't it? Luckily, October is upon us and things could be about to get interesting. For one thing, we are just days away from the start of the Sam Bankman-Fried trial, which will throw crypto back into the mainstream headlines, albeit for all the wrong reasons. Once hailed as crypto's white knight, will he now be considered the industry's kryptonite? You see what I did there? Also, in the month ahead, we anticipate significant macro developments in the US, including the release of the inflation data, the SEC's second deadline for ruling on those spot Bitcoin ETF filings, and much, much more. This video will give you a preview of what to expect for crypto in October. What it won't give you is financial advice, of course. So sit back, grab your calendars, and listen up. The month begins with a potential government shutdown in the US. That's because at the time of filming, it looks highly unlikely that Congress will pass the 12 appropriation bills that are essential for funding governmental operations before the 30th of September, the end of their fiscal year. Now, Congress is stuck between a Senate controlled by Democrats and a House of Representatives controlled by Republicans. The House Speaker Kevin McCarthy looks like he's losing his battle to keep federal services up and running and avoid the worst impacts of a government shutdown. Fellow Republicans to the right of him are determined to cut spending, despite the looming shutdown. They also might try to oust him. Not a fun week for Mr. Speaker. Now, assuming the deadline passes, what does a government shutdown actually mean? If this happens, many government services will be disrupted, and hundreds of thousands of federal workers will be furloughed, i.e. placed on a leave of absence without pay. I know what you're thinking. What will the members of Congress do without their salaries? Don't fret. Congressional salaries have been deemed mandatory spending, which means they're not subject to annual appropriations. Whew, what a relief. Instead, around 4 million people across the country, as well as the millions of more who rely on government services, will feel the full effects of a shutdown. At least essential services will operate as normal, including the postal service, law enforcement, and emergency services. And since government shutdowns are somewhat common, government agencies have plans in place to reduce their impact. However, there will be notable consequences throughout society. As President Biden said in a recent speech, and I quote, "A government shutdown could impact everything from food safety to cancer research to Head Start programs for children. A government shutdown is not just a massive pain in the posterior for Americans, it also has implications on the economy. JP Morgan estimates that for each week of a government shutdown, there's a decrease of 0.1 percentage points in GDP growth. The impacts on crypto are impossible to predict, but it stands to reason that in a period of economic uncertainty, those affected are unlikely to invest in riskier assets like crypto. The 4 crypto-focused bills currently grinding their way through Congress will also be delayed in the event of a shutdown. So regulatory clarity remains, as ever, beyond the horizon. And then there are the indirect economic implications. Most notably, a government shutdown would indefinitely delay the release of critical US economic data, impacting policymakers and investors. According to Reuters, the suspension would affect agencies like the Bureau of Labor Statistics and the Consensus Bureau. Notably, it would also cause delays in the issuing of important data like the September jobs report and the Consumer Price Index, which I'll return to later on in the video. But first, we have to talk about SBF. That's because on the 3rd of October, his trial kicks off. Now, I'm not going to go into too much detail about the trial itself, since we have a video on that in the works. What I will say is that the trial is likely to have more than its fair share of drama. We don't know whether Sam will take the stand to defend himself, but what we do know is that most of his inner circle, including Caroline Ellison, Gary Wang, and Nishad Singh, have all pleaded guilty and are cooperating with the prosecution. If any of them take the stand, that will be box office dynamite. One thing to keep an eye out for is any mention of the former Alameda co-CEO and yachting enthusiast Sam Trabucco. He has gone dark since FTX's collapse, and no one seems to know where he is. whether he's cooperating too, and why he doesn't seem to be facing any charges. If he does pop up, that could be very revealing. Now, as we've covered in a previous video, SBF himself faces a slew of charges that, if convicted of all 7 counts, could see him jailed for up to 115 years. One thing to bear in mind, however, is that for a conviction in federal criminal trials, every member of the 12-person jury must be convinced beyond reasonable doubt that he is guilty. Think of beyond reasonable doubt as meaning over 90% certain. One thing to keep an eye on during the trial, which is expected to last around 6 weeks, is whether the reputation of the crypto industry at large will be dragged through the mud, or whether mainstream media coverage will focus more on Sam. As we know, the FTX collapse was a people failure, not of blockchain or the sector failure. But lazy, eye-catching narratives about crypto might be too tempting for some outlets to pass up. If sloppy headlines prevail, the trial could further damage the industry's image, undermine trust in crypto platforms, and affect both investments and adoption. It won't be nearly as damaging as the collapse of FTX, but it could cause prices to drop. And beyond the impact of prices, the trial could establish a precedent for future cases involving crypto-related fraud in the US. There is a lot at stake.
That's S-T-A-K-E, not S-T-E-A-K.
Thank you, Gary. The next date to look out for is the 12th of October, which is when the US Bureau of Labor is due to release Consumer Price Index, or CPI data, for September. Now, as I mentioned earlier, if there is a government shutdown, this data, in other words, inflation data, is likely to be delayed. Regardless of when it's released, you might be aware that traditionally there has been negative correlations between the Consumer Price Index and crypto prices. As consumer prices climb, crypto prices have tended to drop. But as many financial advisors worth their salt will tell you, past performance is no guarantee of future results. Arthur Hayes, the founder of BitMEX and current Chief Investment Officer at Maelstrom, pointed this out at Korea Blockchain Week early in September. In a nutshell, Arthur's point is that higher interest rates have inadvertently pushed the US Treasury to issue more bonds, and bond repayments to the wealthy, and I quote, stimulate spending and normal GDP growth, creating a paradox where the Fed's rate hike inadvertently fuels economic growth. Arthur is referring to the Federal Reserve's decision to raise interest rates, which it has been doing since March of last year, in an effort to drive inflation figures down. So far, it has been largely successful, although, as you can see from the chart, inflation rates have increased over the past 2 months. Currently, the benchmark overnight interest rate is in the range of 5.25% to 5.50%, though the Fed may raise it again before the end of the year, a point that I'll get back to in the last section of this video. What is really important to emphasize here is that while the traditional view is that raising interest rates are bad for crypto prices, this view is not unanimously shared. Some, like Arthur Hayes, believes the Fed interest rate adjustments are nothing to be concerned about. As he puts it, and I quote, whether the Fed raises or cuts, we're in a good position as a cryptocurrency industry. I'm glad someone is feeling bullish about it all. In any case, if you do want to get our take on what the Fed is thinking, you can check out our latest video on the topic, which you can find in the description below. Next up, we have a series of important dates regarding spot Bitcoin ETFs. As you might remember, there was a flurry of applications by institutional investors in mid-June for a spot Bitcoin ETF after BlackRock, the world's largest asset manager, sent an application request to the SEC. These applications caused a jump in the price of BTC at the time. Then came the news in late August that Grayscale had won its lawsuit against the SEC. For those unfamiliar, the SEC initially rejected Grayscale's application to convert its Bitcoin trust into a spot ETF back in October 2021, citing concerns about fraud and market manipulation. However, a US court ruled against the regulator, essentially calling its claims BS and mandating the SEC to review Grayscale's application. This too drove BTC prices up and heightened optimism that the SEC will end up approving those spot Bitcoin ETFs eventually. And finally, on the 31st of August, the SEC delayed the deadline for making a decision on the ETF applications until October, which put downward pressure on BTC prices. I highlighted these developments for context and really to emphasize how correlated BTC prices are to the potential approval of spot ETFs. Well, October is nigh, and those deadlines are coming up fast. The SEC could approve, reject, or delay making a decision on these applications. Here are the key dates. On the 16th, we have the deadline for the Bitwise Spot Bitcoin ETF application. However, the big day to watch out for is the 17th of October. That marks the comprehensive decision deadline for applications from some of the big firms, namely iShares, i.e. BlackRock, VanEck, WisdomTree, Invesco, and Fidelity. Then we have the 19th of October, which is the decision deadline for Valkyrie Spot ETF filing. As we approach these deadlines, there could be increasing volatility as investors predict and react to the news. So what are the scenarios? Well, first, I should say that these financial products are very similar. Therefore, the SEC is likely to make the same decision on all applications in a quick succession. If the SEC does approve them, we can anticipate a bullish surge in the price of BTC due to its increased accessibility and legitimacy. It is unclear how this will affect the rest of the market. Altcoins tend to follow where BTC leads, but in this scenario, we could see outflows from alts into BTC. If the applications are rejected, the inverse is likely. We can expect downward pressure on BTC and crypto more generally, given the missed opportunity for greater market access and integration. The most likely scenario, however, is that the SEC will delay its decision. It has 240 days to consider an application once it starts the review process, so theoretically, it could push back a final decision on most of these applications to March 2024. This has generally been its tactic in the past: kick the can as far down the road as possible. In fact, the SEC just delayed making a decision on Global X's ETF application, which was due on the 7th of October, and also pushed the deadline back for ARC21 shares application from November to January 2024. Note, the 10th of January is the final deadline for the SEC to make a decision on ARC's application. In other words, no more can kicking for you, Gary. Next up, we have the development that could impact consumer spending, namely the resumption of student loan repayments. These were froze due to the pandemic, but since COVID is now over, payments are now coming due. Goldman Sachs estimates that the resumption of student loan repayments could cost households approximately $70 billion annually. As noted before, when you tighten people's wallets, they are less likely to invest in riskier assets like crypto. On the other hand, savvier students may take advantage of the incredible opportunities in DeFi. For those that are unfamiliar, some DeFi platforms allow borrowers to use crypto assets as collateral and secure loans in stablecoins that can be used to pay off debt. While there are risks to this, particularly if the price of the asset that you have collateralized drops significantly, it offers many advantages to the borrower. They include delayed repayment dates, better interest rates on your collateralized assets appreciating. I'll leave a link in the description below if you want to learn more about DeFi loans. And speaking of incredible opportunities, the Coin Bureau Deals page has some amazing free discounts at some of the top exchanges, as well as up to $40,000 in airdrops. Not to mention big discounts on top hardware wallets to store your crypto securely. Wasn't that such a nice segue? The link is down in the description below. And last on our list of things to look out for this October, we have the next meeting of the Federal Open Market Committee and the minutes of the last one. These meetings are a big deal for investors, analysts, and policymakers alike. They happen 8 times a year and are where big monetary policy decisions are determined, including everything from personal savings to interest rates to home and business loan costs. At their last meeting in September 2023, the Fed members maintained rates at 5.25 to 5.50%. 3 weeks after that meeting, in other words, the 14th of October, the minutes of the meeting are due to be released. For discerning analysts, like the team here at Coin Bureau, the minutes of these FOMC make for interesting reading, as they can provide really valuable insight into the Fed's thinking and also help predict its future policy decisions. As I previously mentioned, there are expectations that the Fed will increase the rate hike by 25 basis points before the end of the year. In other words, rates are expected to increase to 5.50% to 5.75%. These minutes might provide clues as to when this expected rate hike will take place. The next FOMC, in case you're wondering, is scheduled on October the 31st to November the 1st. The one after that is the 12th to the 13th of December. So there you have it. If September was the proverbial calm, October could be the storm. Then again, it could be that most unappealing of American delicacies, a nothing burger. But maybe it's this unpredictability that makes watching crypto markets so exciting, right? Well, now I want to hear from you. What macro factors do you think will swing the pendulum in terms of crypto prices? In this video, we've only focused on developments in the US. What developments are you watching in for other countries and regions, and why? Before you leave, remember to explore the deals page I mentioned earlier. There, you'll discover the top-notch promotions and discounts within the cryptocurrency realm. Additionally, you can show your support by following us on social media, liking and subscribing. You'll find the link to our deals page and social media channels in the description below. That's all for now. Thank you for tuning in. I'm Jessica, and I look forward to seeing you all next time.